Well, after a truncated week, we're back, and seems like the gift nifty is raring to go higher. At least right now, it's indicating, a higher implied open. In fact, the adjusted move for Friday that indicates a very comfortable 138 point up in the green kind of start. So seems like we're going to be inching closer to that 22,600 mark. But yeah, it was a long weekend, so lots was happening while we were away playing Holi. The Dow Jones posted its worst week since 2023. So we've already seen as to how the US equity markets have begun their tumble. Although stock futures are yet again indicating a bit of an ease off and a fall. US yields have risen, crude prices inching higher. US is vowing to continue striking the Houthis in Yemen. And all eyes now are on the Fed rate outcome as to how is it that the Fed is going to play the balancing act. China, of course, has unveiled a grand plan to boost consumption. So a lot of moving parts, within which I think the silver lining is that for us at least, the FII selling has consistently seen a reduction. But first, of course, to the global markets, wherein the Nasdaq and the S&P clearly are in correction mode.
So there's nothing new in terms of what the global template is. Why? Because what we've seen, let's say on Friday or Thursday night, which is more important, what pretty much an extension of this correction which has kicked in US markets. So the world is very divided, Aisha. There used to be a time when US markets would in a sense decide which way the world would move. So US markets are down, everything else will start tumbling down. Arre raat ko US market niche band hua, obviously you expect Asia to start lower. That is not the construct. Europe is on a different orbit. Asia seems to be ignoring what is happening in the US market, and the selling in the US market largely because of valuations, concerns around tariff, concerns about how the US economy would move, in a sense have really impacted the rhythm of that market. Now, this is what is happening in US market is frankly good news for us. Why? Because this entire transition which has happened post-November, where flows had moved out of India and into or from other emerging markets into US, they are stalling. Second, one is getting a clear sense and a direction that life into emerging markets seems to be making a comeback. And third, the new element at play is now at Europe, where the European large economies are now looking at really rebooting themselves. I think for me, Aisha, now the news is actually more important what will come from China, Asia and Europe. For example, Germany. They're talking about reflating their economy. Japan is talking about changing the direction on interest rates. China has already filed a bazooka. So US is critical, US is important, but in the near term, I think it's really the different non-US regions which in a sense will set the tone of how Indian markets would move.
Oh yeah, absolutely. And look at the news flow coming in from China. I mean, just yesterday, the Chinese government has announced that it will be taking steps to revive consumption by boosting people's income. So it seems like an income tax cut perhaps is coming over there. Other measures also include the plans to stabilize the stock as well as the real estate markets, so something big in the offing. And more importantly, raising the country's birth rate. That's what reports seem to be indicating. Remember, China has really been a demographic play as well, other than of course the stock markets drying up. So any revival to that effect is really going to be quite meaningful in terms of the long-term trends. Yeah, so the data point from China this Monday morning, including the industrial production, urban investment, retail sales, urban unemployment rate, all of that, seems to be under consideration right now. I just want to mark what, the Chinese market and how the Asian markets are currently up to and what they're doing in trade. Shanghai is actually holding up comfortably a good 0.5% in the green. There's Hong Kong as well, which has climbed up very nicely. It's almost inching towards a 300-point gain. Japan is going strong, over a 400-point move there. And this at a time when the US market handover was also quite comfortable. While the Dow did post its worst week, on closing on Friday, it did pretty well. About a 674-point move is what you saw there. It was an over 2% move coming in for the S&P, and the Nasdaq as well was almost closing in with that 3% gain mark. So yeah, all looks comfortable for the world this morning, and it seems like for us as well, it's going to be holding good as the Nifty implied open seems to be suggesting. It was a rough week, the week gone by, what with the fall in the PSU banks, IT taking the sharpest knock with that 4.5% cut on the Nifty IT commodity index. Metals lost sheen, real estate, autos, these were all sectoral laggards. Having said that, I think the silver lining, like Nikunj, we were pointing out last evening as well over a call, that the FII selling, the quantum has drastically reduced.
See, FI selling is one factor. Second, you are really getting a sense that at lower level markets are getting more and more reconciled to the fact that the earnings data and the trajectory of the macro is going to be far better than what in a sense was there, let's say, a quarter ago for the current quarter. And C, for the first time you can decisively say that Indian markets are falling less and they are gaining more. But since all of us are really obsessed with this FI number, let's look at it. Now, there were days in the month of Feb where the number of FI selling was on an average about 4,000 crore. And some odd days it even went to as high as 11,000 crore. But there has not been a single day in last at least in last 2 weeks, where the selling has been north of $500 million. In fact, the average now clearly seems to be much below 1,500 crores on a daily basis. One. Second, there is evidence of short covering in the F&O market. Third, you are getting a sense that the SIP flow seems to be really stable. So if I look at the factor, at least the liquidity factor, which is FI flows reducing, element of short covering in the F&O market, and we are getting evidence of evidence of SIP flow, you can make a reasonable amount of case that Indian markets now in the near term, they've bottomed out. There is case for markets now to not rally, but perhaps inch higher. And if this stability continues for next couple of days, then I will not be surprised. Then there could be a deep swell coming in some of the mid and the small cap stocks also. Cameron Brand.
If you like this video, then like, share and subscribe to ET Now.